All right. Hello, everyone, and welcome to This Week in Crypto. If this is your first time here, this is a weekly panel where Santiment team and community members discuss recent crypto market events, fundamental data, and just interesting market insights that we've discovered over the week using our metrics and indicators. So if you haven't used Santiment before, we've got dozens of tools and custom metrics, including on-chain, social media, and development indicators, all with the aim of helping you better understand the crypto market, its volatilities, and just the behavior of its overall participants and stakeholders. So I suggest heading over to sentiment.net during or after this call to check it out, and also to join our Discord. The link will be in the description of this video after it gets published on YouTube. So we're a bit short-handed today just because a couple of our community members, or actually team members, are traveling across the world at the moment. But we still got a lot of interesting stuff that we want to go over today. So I'll start by giving Brian the floor, as usual, and then we'll go from there. Brian, wherever you're ready.
Thank you very much, Dino.
Actually,
All right. Hope everyone's having a terrific Friday here. As usual, we're going to start off with a quick MVP update. Since last week, which was showing mostly bearishness, there was a pretty stark transition that happened pretty much immediately after the meeting, actually, where we started to see an increase in token circulation, which, as most of you know, is the amount of unique tokens that are exchanged between addresses in a given day without ever counting one more than once. So what we saw was an increase in that, which I'm going to show you quick on SAN data here. If I can find it again, token circulation. Yeah, right here. I'm going to isolate the token circulation and show you that over the last week, basically since the 22nd, we had this big spike here in mid-January, and if you can remember, that was when we really started to see a surge from 7,500 up to about a high 8,000s before dropping. A lot of people were questioning whether 9,000 was the support level that just wasn't going to be able to be cracked. And sure enough, last Friday, we were able to do it before falling back down and then retesting it. And then, as most of you know, we went into the mid 9,000s over the last few days, where there's been a little bit of indecision in the markets and a little bit of resistance. And as you can see, our token circulation here was pretty much our highest since the 15th, and then before that, since about late November, after we had a pretty rough December here. So overall, the trend is starting to look up a little more. We're going to have to wait and see if it can continue into next week. And then going back to the MVP here, you'll see that part of the ability for Bitcoin to actually get into the mid 9,000s was due to these hash marks here. And I'll make it even bigger just so you can see it really well. Let's try 140. There we go. So this hash mark here, all three of them, they are the 3-day one, which represents 3 days ago, is pretty much right on the trend lines of yellow and red here, which represent the 10 and 16 month trends of MBT. So it takes all of the colored bars here in mind and averages them out. And then the yesterday and 2 days ago were well above, meaning we're starting to see some healthy growth in token circulation. However, keep in mind, we want to see consistency in this level, and a few days is not going to cut it. And as you can see way up here, this was about 4 to 10 days ago, taking the average of that, and it was way up in the sky and something we don't want to see if we're looking for a healthy token circulation of a network. So interesting there. Moving on to Ethereum. If I go over right, not quite as good actually, which is interesting because Ethereum has been exceeding Bitcoin pretty much consistently since last week, not by a far margin, but it's definitely been one of the more consistent altcoins since we really started pushing past 9,000 in Bitcoin, and Ethereum I think touched about 186. Not sure on that exact figure, but it really started to take a run toward 190 before falling back to about 178, 179 where it is now. And from what I'm seeing, it's not due to the token circulation. I think Dino and some others may have some theories as to why Ethereum is doing well right now. And we did just release a big publication on Spencer Noon's channel, which sort of goes over that a little bit. But one thing we can rule out is the fact that it's being exchanged at a healthy rate. I don't want to say that this is a sign of doom and gloom and something that will indicate that we're about to fall, back below 160 again or anything, because token circulation for Ethereum isn't quite as important as it is for Bitcoin, because, as you know, Ethereum is pegged to Bitcoin to an extent in order to flourish. So watching this, we're still in the red, and it's just something to keep in mind. And if we do start to see hash marks falling below the Ethereum's trend lines here, that's when we know it's time for takeoff. Moving on. Before that, if there are any questions about NVT, I'm happy to look into anything more. Anyone want to touch on that?
Not necessarily. I think, yeah, pretty much what you've shown is what I've been seeing over the past few days. And about that insight that we wrote for Spencer Noon's network newsletter, yeah, it's one of the things that we mentioned there is this overall decline in the percentage of active Ethereum tokens over the last year, which sort of correlates with the lower levels of token circulation, both short term and long term. I think that's
Right.
due to a combination of reasons, both including just the general market conditions compared to last year, as well as the fact that Ethereum has use cases which kind of warrant relative token inertia and inactivity. Like if you lock your ETH into whatever trendy DAI solution, or sorry, DeFi solution you're looking into. It's not going to, those coins aren't going to be very active over the next couple of months at least. So, definitely I agree that valuing Ethereum by token circulation can be a weird beast, especially as far as, as DeFi kind of grows as a use case for Ethereum. I wouldn't be too surprised to see token circulation and general token activity for Ethereum drop to lower and lower levels. That being said, it's still on a short-term scale. It's still noteworthy when you see Ethereum's token circulation week over week decrease, because that's not indicative of a long-term DeFi, growth rate popularity. It's just basically people are not using Ethereum overall. So yeah, I wouldn't be surprised to see this trend sort of continue, both long term and somewhat short term. And it's yeah, it seems to be the red bar seems to just be growing, which is kind of
Yeah.
concerning
And there is,
for its short term action.
sure, and there definitely is correlation. So keep in mind, it's not something that we just go over for the sake of touching on that after Bitcoin. We do see a ton of correlation here with the red bars averaging a negative number, -6 and -9 for red orange. So when you see poor token circulation for Bitcoin or Ethereum, there tends to be negative results over the long term. So it's not something to discount entirely, but taking a 1 week snapshot and even just a 1 month snapshot, it can easily turn around or be sort of something that you can take separately compared to Bitcoin, because if Bitcoin is a little more on the neutral side, like it's showing over the last week, Ethereum is able to make up ground, even if we're having things like record high miner accumulation right now, which is something that we reported on. That could mean that there's a lot of hodling going on the miners end, and part of the reason why a lot of these tokens, especially the new ones, aren't being circulated right now, and that could be skewing this data a tiny bit too. So if it continues for another few weeks, we don't want to continue seeing these hash marks. It would be negative, and eventually, Bitcoin, if Bitcoin is neutral and Ethereum is going like this, it's not a great thing. but Bitcoin can keep Ethereum in a good place. So it's just something to consider. All right, so I've exhausted NBT there a little bit. I'm going to move on to top holders now and just go over what we've been seeing as far as 15 of the key ERC20 tokens that we track here on our top holder supply sand sheets model. So what this is, for those who haven't seen it, is a recap of the last 30 days and what the number one top holder in this case is doing with their tokens as far as holding on to the total percent of supply that they have. And in this case, what we've seen is mostly hodling since the last week. So today is 131. We have data through 130 because today is halfway through where you guys are in Europe, and it's just getting started where I am. Since 123, it's been mostly neutral with a few exceptions. Maker had a bit of a sell-off. That would be represented by this yellow line. And it went from negative 0.3 to negative 1.3 in one day. And that's pretty significant when you're talking about the top holder of a token. From what we've seen, it hasn't affected it too much, but when we see continued moves like this downward, that might be indicative of a lack of confidence in a token, or it could simply mean that Maker or any specific altcoin has come enough into the green or had enough profit for this holder, and considering his large supply, they wanted to simply take a little profit. So one simple move like this isn't something to overreact to, but if we see something such as DAI here, where we saw a big sell-off in mid-January, and then mostly neutral, and then a little bit of further selling off, this is a little more interesting. Now, keep in mind, this is the only stable coin that we track on this chart, and it tends to be correlated to Ethereum and other ERC20s thriving. This could actually be indicative that they are selling off some of their DAI in order to gain more Ethereum or something else. Now, we know that the top holder of Ethereum is not the same top holder as DAI, because that would likely have some more correlation here. But from what I'm seeing, DAI is the one that's having the most volatility right now, and it did have a very interesting sell-off right at the top of Bitcoin in mid-January. But it's a difficult thing to gauge right now, and I'm really trying to figure out what the DAI holders are doing, because on both the top end, the top 10, where you can see it here, and the top 100 holders, we're all seeing pretty much the same sell-off. And I think it's because the top holder probably is skewing that data on their own because they have such a high percentage of supply. So looking at this top 100, we actually see a little bit of a different pattern where one specific token seems to be standing out. The top 100 holders seem to be very interested in accumulating more 0x. And that had a bit of an interesting ride last week. It's been pretty calm this week. But I'm looking, if I'm a prospective ERC20 investor right now who wants to start longing, I'm looking at this and I'm seeing that there seems to be an increased confidence specifically for the long term of 0x. And this could be one that I might be able to ride upwards once the bull market really starts to be underway. That's something interesting to look at here.
That is. Sorry, Brian, just one sec. Now that you mentioned 0x, I remember Gary actually had he wrote an insight about 0x and why he thinks there are some positive signals for its short-term price action. Gary, do you want to just like briefly in basic bullet points go over what you saw on 0x's charts and why you think there might be some hope for its short-term action, because it is now, well, it's just 1.10%. just 1.10% in the green for the last 24 hours. But you seem to think that there are reasons to be hopeful for its price going forward.
I just tend to trust more social moods and the DAA. And that's on one side. On the other side, I didn't take into account when writing this that 0x deployed another version of protocol. And this may kind of mess up some of our metrics.
Indeed, yeah, I've been getting notifications from their Discord over the past few days announcing a bunch of new protocol changes and updates to the platform. So it could be kind of correlated with the general project announcements. Is there anything, Brian, if you go over 0x's profile page, is there anything on their development activity that might have foreshadowed this as well?
Checking it out now here.
Better to go on Sandbase because there you can see development activity. So here what we're gonna take a look at is 0x's the team's development activity over the last, let's say, 6 months, and see if there have been any sort of outliers, something that might have alluded to new features or protocol changes being introduced to the platform. What we do here is we calculate or we track the GitHub repositories of over 1,000 different crypto projects, and then we calculate all of the actual development related commits and activity on their GitHubs, and plot them against the price of a coin and see, from time to time we can see some correlations between spikes in development activity preceding sort of the price action of a coin in case, and you can see some sort of a spike, actually a long-term spike for 0x over the last 3 or 4 months. They seem to have been really ramping up their development efforts, and I absolutely wouldn't be surprised if this was the few announcements that they have kind of brought to the fore over the last few days. I wouldn't be surprised that this is the reason why we're seeing this spike.
Yeah, and it pretty much happened right at the beginning of that initial surge in 2019 that saw Bitcoin almost scrape 14,000 before falling back down. So the timing of it is very interesting. It's like they were motivated by the fact that the markets were starting to wake up a bit.
Yeah, and I know a few people from 0x team. They are super dedicated to the project, and from at least from my limited interactions with them, they don't really care about short-term market conditions and are very much kind of laser focused on improving their platform as much as possible. So yeah, and can you also just while you're there look at the daily active addresses for 0x, maybe for the last 6 months, just so we can kind of see what the recent amount of activity on the network was. And can you look at the last 6 months instead? Because this is a bit, yeah, it's going to get a bit noisy otherwise. Yeah, so this is, you see that spike right around, what is that, like January 27th or something?
Yeah.
Yeah, 27th, 28th. Yeah, so this is the thing that Gary reported on. So there's, as you can see, the price of 0x has been trending downwards for almost a week beforehand, and yet we've been seeing an uptick in development, both in development and general network activity. So this is usually a positive sign for a project. Most of the time, like if you look at 0x's activity over the summer on this chart, so basically not the summer, but actually autumn, so September and October, most of the spikes in development activity perfectly correlate with the price action and the local tops. So this is what we often see in terms of projects prices and on-chain activity correlating, and then once the on-chain activity starts to slow down, the price is no longer able to sustain its growth, and so it starts to follow the decline in network activity over the next few days. But now when we see these sort of outliers where there's a spike in network activity and it's not really correlated with any sort of price incline, but it seems to be organic, that's usually a pretty good sign for the project. And also we have an article coming up showcasing the top 20, most or the biggest uh, growers in terms of network activity over the last month, and 0x is on that list. So it's had a pretty good month in terms of adoption of their coin and activity on the network. So I'm not surprised that the big holders are kind of hopeful and accumulating, because at least from the points of the charts, that seems to be a good move, at least for the time being. So yeah, interesting overall.
Yeah, and you talk about an altcoin that really seems to have some correlation of its price compared to the amount of daily active addresses that are being created on a daily basis. And 0x is a really prime example. If you take a look at the last 6 months,
Yep,
you
yep.
see it really start to rise here in October. And then as the price drops down, so does the daily active addresses being made. And then as we see here again, to a smaller extent, in mid-January, we saw a resurgence of them, that spike that we just went over. And what we'll really want to look for is whether it can maintain this level that it saw in early to mid-January, or if it starts to drop off to where it was in November, December. So,
Exactly, exactly. This is what we preach a lot in our insights. Basically, we call this a price DAA, which stands for daily active addresses. The price DAA divergence. Essentially, during these pumps, we oftentimes see huge rises in activity on the network, and a lot of that is just prompted by speculators kind of wanting to take advantage of the action. But then at the point where there's a decline in network activity, the price of the coin is no longer able to sustain itself just because there's not enough interest anymore. So if it happens the other way around, where the price is actually declining and we're still seeing a surge in network activity, that's usually a good sign. And what Brian is showing right now is one of the things that, or one of the strategies that we've kind of been developing around this very phenomenon called, daily active addresses versus price divergence, where we're trying to figure out or trying to find times in a project's life where there's a huge divergence between the trend in price and the trend in network activity, and whether those divergences can tell us something about what the coin's short-term action might look like. So Brian, want to go over what you're showing us right now?
yeah, absolutely. So we track exactly what Dina is referring to on a Sandsheets model, specifically for Bitcoin and Ethereum, where we look for threshold crosses, which represent significant divergences between daily active addresses and the price of an asset at any given time. The reason we only do Bitcoin and Ethereum right now is simply because there's a little less correlation between the other ones. We have Maker and Bat here that work to an extent, but I won't get too into weeds on them. But what we look for typically are divergences either representing overinflation of price compared to daily active addresses, or vice versa, underinflation. Overinflation would be represented by the red, under would be represented by the green, and we typically look for bunches. So we had a few single strikes here over the recent couple of months, but nothing significant enough to really start to react and want to take profit or buy dips, anything like that. What we did see was in late July, when we saw our top in Bitcoin, where it got up to about 13.8. That's when we started seeing a flurry of these different red strikes showing, hey, we're not getting enough daily active addresses made compared to what the price is showing. And if it goes over those thresholds, only then will those signals show up. So we might have like just slight overinflation or slight underinflation in these areas, but they're not significant enough to show. And we specifically did a back test here that actually measured what would be a significant amount for that threshold to cross in order to show that we're getting positive results when the green signals are going off and negative results when the red are going off. So when red is going off, that's when we see sell last signal here. It goes down negative about a half percentage per day here anytime we're in a red zone, and vice versa. When we are in a green zone, that's when it's going up about half a percentage as well. So very easy to sort of correlate there. half percentage in the green, negative half percentage in the red. Now this was an outlier, and I'm saying that because we didn't have enough signals here going off. We want to look more for bunches, but in general, the price will go down on average when we're in the red zone, vice versa in the green zone. We have it on Ethereum as well, but to a smaller extent. And I would encourage you guys to check it out. Just hit us up on Twitter or ping us on Discord, and I'll make sure that you can check out the template a bit and explore. One other thing I wanted to show, I made a new few tabs here on the top holder supply. And what I'm measuring here is how significant each top holder has as far as their reign on the token overall. So not all tokens are created equal, and even though we look at what the percentage changes are here on their supply on this chart, what this is showing is exactly what full percentage of the entire supply is being held by that one holder. And in this case, we see a very low number here with Ethereum, which is actually a good thing because it's showing that there are many different holders out there from different addresses, meaning the ability for one specific holder to have a significant reign on the token is limited. Whereas if you look at something like Fetch, it was actually at 100% for the one holder last year because it was a brand new token and it hadn't really been circulating yet. Since that time, we're now at 42.4%. So it's been diluted through different addresses since that time, which typically is a sign of more healthy, the ability for healthy growth, because it needs to be circulated through different addresses in order to actually thrive as a project. Other notables, we saw Maker held at about 27.2% last year, and it's now down to 19.7%. So that's been spread out a little bit more. Basic Attention Token has also seen a big dip from 17 to the 9s. So the top holder for BAT is actually cut in half. And it's also important to note whether last year versus this year is seeing a rise or a fall overall. So Ethereum, surprisingly, the top holder actually has more of the supply now, 2.0 versus 2.5. So they upped their own holdings by about 20% over the last year. And then, Decentraland, of course, hasn't moved. And then we see a lot more that have fallen, meaning there is less of a hold by that top holder compared to the majority. We also can see it from a top 10 or top 100 perspective.
Yeah, that would probably be more. Sorry, yeah, just wanted to say that would probably be more interesting because the 1%, the biggest holder, I would assume in some cases, especially with Maker and BAT, I would assume that's an exchange. Like I think we have this data and we can check, but so for Fetch it's probably a team wallet, and then for Maker and Basic Attention Token, I would not be surprised that this is an exchange, and therefore there's less of it on exchanges than it was a year ago, which is something that I think I've seen on their charts as well. So yeah, I think 10% and 100%. So are those like the top 10 addresses and the top 100 addresses? Yeah, I think that would be way more interesting just to see kind of overall what both exchange and non-exchange wallets have been doing with their with their supply of the tokens that you have there.
Mm-hmm. Yeah, and we can see here just what a significant hold the top 100 holders of a given asset really have on the project overall, with many of these, almost the majority of them exceeding 70% of the total supply. So it's something I'm really going to look into more and probably release some sort of article about, what a stranglehold these top 100 holders have on the market and what significance that has, and why we actually want to see these numbers decrease over time, because it means that more active addresses are really, holding them themselves, and what the exchange impacts are.
This is something that Jan has done a while back. Jan, do you want to just shortly, because I think it's very interesting, do you shortly want to explain what you did a few months ago. Well, actually, it was almost half a year ago now, where you kind of tried to calculate the distribution ratio of ERC20 coins and sort of the findings that we had with that analysis, because it dovetails into this perfectly, I think.
Yeah, so basically, the idea was, or what we calculated was the ratio of how many or how much
Brian,
percentage.
can I share my screen while Jan's talking, just so I can show the analysis? Go ahead, Jan.
Yeah, it's okay.
So the percentage basically of the top 100 wallets compared to the total supply. So yeah, basically how distributed or how concentrated is the whole network for a given project. And that is, of course, interesting because you kind of want to have, if you're talking about like a functioning cryptocurrency, you kind of want to have it somewhat distributed over a lot of wallets, because that kind of shows that people are actually using it versus the most of the supply of the token really just condensed in like the team wallet and like some exchanges maybe, and that's it. So that would tell you that it's kind of not really that used, maybe just used for speculation. And we basically looked at how distributed or how concentrated different projects were, and then generated portfolios out of the most concentrated and the most distributed projects basically. And in comparison, basically what we found was that we kind of performed relatively well when we had more distributed portfolios. And even, this was basically like the idea to have some kind of long short portfolio, which is what hedge funds typically do, where you basically, since we have projects where we say these are better than the other projects, we could basically buy or simulate buying the distributed projects and short the more concentrated projects and get an even better, basically a very positive return, while pretty much everything else was crashing even.
Yeah. So it's super interesting, and I think it just makes sense from a behavioral standpoint and just a general project health standpoint, is that when you have these coins where 90% of their supply is located and concentrated in top 50 wallets or something, number one, they are going to be able to dictate the price of a coin very often, and in general, a lot of the market conditions for that coin is going to be dictated by very small percentage of people. And then that also just assumes or denies any sort of usability of a coin. So if you are expecting a coin to flourish in terms of its utility and use cases, you can't have 90% of it being located on like 5 exchanges and 5 whales wallets, because at that point, that's, I think, very indicative of which coins are utilized more and distributed more around the community. And it, to me, does not it isn't surprising that we would see the more distributed coins over time perform better than their concentrated counterparts. So what we've done here in the end is just we've tried to make what will happen if we made this a strategy, right? So basically, shorting ERC20 coins and generally shorting altcoins isn't as popular, still isn't as popular as I think it should be. But there are platforms like DYDX and several emerging decentralized solutions where you can short altcoins. So if you were to use our strategy, which is basically look at the most distributed coins, or sorry, most concentrated coins, so the ones that are generally held in the hands of like 50 or 100 wallets, and you shorted those, this is what you would get over the last 2 years. So the returns of your strategy would be here, whereas holding Ethereum would be here. So very, kind of telling as far as, the coins that are more distributed and more circulated are the ones that are more used, and therefore oftentimes, their community is more active, and that does impact the price of a coin long term. Yeah. great analysis once again, and I'll share a link to this in the description of the video too, because I think it's one of the nicer analysis that we've done over the last half a year. Thanks, Jan. Sorry, Brian, you can go ahead with the rest of your presentation.
I'm pretty much all set on my end. So if you want to take the last 20 minutes and show some of your insights, that would be great.
Sure. Okay. Actually, sure. But actually, beforehand, I wanted to give the floor to Gary, because Gary said that he has something to share today, which I'm quite excited about. I think it's about how WBTC can be impacted by several fundamental indicators, right, Gary? If you want to share your screen and kind of give us a download on what you've been seeing on the charts, that would be great.
Thank you for the floor, Dino. I'm stepping in. Yep. So I've been watching at the wrapped Bitcoin and found this interesting coincidence or not, this metric, the percent of active coins, the 90 days one, is kind of preceding the price action in opposite way. Let's see this significant drop and this rise in price. This way we have a price going down, and before that the percent of active coins is increasing. And here we go, the percent is going down and the price is going up. That's it. That's just stuck. Whatever interesting.
Yeah, it's actually, let me share my screen again, Gary, if you don't mind. This has been shared on our platform a few times before by both the Santiment team and community members. This sort of finding that the percentage of active coins has actually been preceding big just trend shifts in price. So I might take a while to find this insight. It's by the industries. So here it is, define demand part 1. So in this insight from December, he talks about this very phenomenon where he kind of looks at the percentage of active coins and how it correlates with the price. And this is something that I've been just anecdotally seeing on a lot of our charts as well, is that both in terms of the 90-day coins, so coins that have been active over the past 90 days, as well as the coins that have been only active within the last 365 days, the dips in those coins or the activity of those coins can very often kind of be preceding big spikes in price. So the point or the argument that the industries makes in this insight is that he thinks that the reason for that is just basic economics, where as the supply of active coins diminishes, there's the demand for those coins increases, or the demand for the coins that are still in circulation increases, and therefore the price of it does as well. So basic scarcity at work. So I don't have any examples for this phenomenon ready at the moment, but I've definitely seen this happen quite a few times in the past as well. So thanks for sharing, Gary. Okay, so I guess now let's see how much time do we have? Okay, we got about 15 minutes. I wanted to first off just look at what's been going on with Bitcoin's MVRV real quick, because over the last week we've been seeing some interesting activity. Let's actually see the percentage of active coins for Bitcoin. Over the last year, there's been a dip here, which kind of, preceded a rise in price, but not immediately. I think I've seen this much more often in terms of altcoins like Ethereum and Maker, Basic Attention Token. We can, if we have time, we'll take a look at a few of them in the end. So MVRV, basically what MVRV, in case this is the first time you're seeing this metric, what MVRV shows is the average profit or loss of across all of the holders for a specific time frame. So basically we have here about 10 different time ranges for MVRV. For example, let's look here for MVRV for the last 365 days. So basically what we're seeing here is what is the average profit or loss of all the holders that have gone into their coins or moved into their coins over the last 365 days. And you can see the same thing for different time ranges: 10-year MVRV, 2-year MVRV. I think so far we are the only provider that has this sort of age band MVRV ratio. Most of the MVRVs that you'll find out there is just looking at the average profit or loss across all of the Bitcoin or altcoins in existence, whereas we have really tried to segment this into more chewable pieces and try to make it a bit more granular. So one of the things that I wanted to show is when we last talked about MVRV, I seem to remember for Bitcoin specifically that the MVRV for short-term holders, so let's say 7-day, 90-day, 60-day, and 180-day, they were pretty much in green for a lot of this sort of early January action. But as far as the long-term holders, let's say 365-day, 2-year, 3-year, and maybe 5 years as well. So they have been kind of in the red to start the year. And we have seen this sort of divergence where basically new money has been pretty happy with Bitcoin's price action overall, whereas long-term holders were actually losing, on average at least, losing on their initial investment. So for example, people that have bought Bitcoin over the last 365 days were 10% on their initial investment, down 10% of their initial investment. So what has this jump to 9.3K done to various Bitcoin holder categories? Well, it's actually been pretty opportunistic for all of them. This is the first time in a while that I've actually seen all of the Bitcoin categories for MVRV in the green. If you see, starting with 7-day, so let's start with new money actually first. So 7-day holders, 60-day holders, 30-day holders, and 90-day holders. So the MVRV ratio is between 4 and 16%. So for example, the people that have gone into Bitcoin in the last 60 and 90 days, they're currently about 16% up on their initial investment. And then if we look at the long-term holders, so 180, 365, 2 years, where are you, 3 years, and 5 years, we're seeing even greater gains, except for the 1 year, the 365-day one. So people that have gone into Bitcoin in the last 2, 3, and 5 years, they are all now above almost 25% on their initial investment. So we have seen very often in the past that this rise in MVRV. The MVRV peaks at the local tops for specific coins, which kind of makes sense, right? Because let's say, for example, let's use the price here and look at the 2-year MVRV, right? So the MVRV will be at its peak right around the top, and then it will start dropping soon thereafter. The problem with MVRV as a indicator is that you can't really be sure what this peak is going to be, or when the holders are going to decide that they had enough return on their investment before dumping on the market and offloading their bag. So for example, here we can see that 2-year holders were about 80% on their initial investment before, I would assume, a lot of them started selling, and this is what kind of prompted the price decline as well. So one thing that we can do is we can take cues from historical action of Bitcoin and see what the current MVRV levels are and how they correlate with previous action, so that we can kind of know what's been or what is about to happen short term. So here we can see that, let's see, 2-year, 365-day, and 3-year levels are currently seem to be right around the October top, right? Or they seem to be gravitating toward those levels. Some have actually already overstepped them. So, for example, the 3-year MVRV ratio is already above the one that it was that it was in October. But the other ones are kind of starting to circulate around that point. So, obviously, historical performance doesn't indicate or doesn't signal that the same thing is going to happen currently, but it's interesting to see that we are kind of now slowly trudging toward that level or that range where we've seen the local top for Bitcoin the previous time around, where long-term holders have started kind of offloading their bags because they were pretty much satisfied with the investment or the return on their investment. So this is one of the things that I wanted to take a look at, as well as the long-short difference for Bitcoin. So this is something that we have developed in-house. As far as I know, nobody else has this metric. If you have been watching these calls previously, you would have seen us showcase this metric in the past as well. Basically, what the long-short difference MVRV long short difference shows is it shows the differences in the MVRV of long-term holders and short-term holders. So for this specific metric, we are looking at the differences of MVRVs for 365-day holders versus MVRV ratios of the 60-day holders, and how their average profit and or loss margins correlate with the price action of Bitcoin. So basically what we've seen in the past, over the last 10 years of Bitcoin, we have seen MVRV long-short difference only passed the zero mark 3 times, and each time that it has done so, it's kind of spurred or it has indicated the end of the bear cycle for Bitcoin and spurred a new rally. So the first time it happened was in 2012. The second time it happened was in 2015. And the last time it happened was back in March, where we wrote about it just before Bitcoin went from 5.9K to about, I think, 8K in less than a week. So for most of the start of the year, Bitcoin has actually been trending, or Bitcoin's MVRV long-short difference has been trending downwards. But over the last week or so, it has actually started going back up. Now, it's still far away from reaching zero again, about 3.31% off that level. But it's going to be interesting keeping an eye on this and seeing if history repeats itself. So far, this has proven to be a fairly reliable indicator of when the new bull cycle for Ethereum will commence. And given the hype around the halvening in May, we might actually see those levels right around the halvening time. So just a remark that I wanted to make here to keep an eye on this chart. You can find this on data.santiment.net, send data, and keep an eye on this, on these levels. Okay, so I have a few more things that I wanted to show, but since we've only got about 5 minutes left, let me look at Kyber. So I've been looking at several coins that have been kind of flashing top signs, Kyber being one of them. So over the last few days, we have seen a number of Kyber's both fundamental, like on-chain and social indicators, indicate that the coin is approaching its local top. So the first thing that I wanted to show is basically the same thing that we've just seen with 0x, which is the spikes in daily active addresses. So here you can see over the last, let's say, 2 months, pretty much every spike in Kyber's network activity or daily active addresses has correlated perfectly with its local top. Actually, let me take out the night mode so you can see it even better. So here in December, on December 6th, we've seen the greatest spike in daily active addresses for Kyber for at least 6 months. And then right after the network activity started dissipating, so did the price. And then here back also on December 17th, here at a interim top, so the price started consolidating right after that, and then here at the very top, and then once again here. So over the last few days, we've been seeing this same move, which is, as you can see, at least historically, been indicative of Kyber starting to slow down, not just a bit, but actually quite a bit. And we've already seen Kyber kind of trudging downwards over the last few hours, so I wouldn't be too surprised, although obviously not financial advice, I wouldn't be too surprised to see this trend continue just based on its on-chain activity, especially if we continue to see this decline in a general amount of activity on the network. So we've already seen the amount of daily active addresses start to slow down and trudge southbound. So if we see this trend continue, the price is probably not going to be able to sustain itself for much longer. The similar pattern has been observed in Kyber's social activity. So basically what you're seeing here is you're seeing our social data set, which captures messages and comments from over 1,000 different crypto-specific social media channels. And then we calculate or plot the amount of mentions of a specific coin over the coin's price. And we have seen very often this correlate very effectively with major changes in price for the coin. Here you can see the big spikes in social volume right around the very top. Here as well. Here at the interim top, here at the local top as well. Here at few spikes in Kyber's price action, and then here over the last few days as well. So once this trend starts again going south and starting to decline, indicating that the crowd is kind of moving away from the coin and is no longer interested in its price action, we have very often seen the price action start to follow and decline as well. Now, I would not be entirely certain that Kyber is going to going to bust over the next couple of days or so, because there are a few interesting differences this time around compared to the last time. The first one is in its top exchange, top wallets overall. So we're now looking at the top 100 holders for Kyber over the last 6 months. This includes both exchange and non-exchange non-exchange wallets, although you can only look at one or two of them. So here we've been seeing, especially for exchanges, some very interesting patterns. So this is, we're now currently looking at the top exchange wallets for Kyber over the last 6 months and their correlation with the price. So as you can see, the tops that we have just seen here, right? Pretty much every time that there was a local top, there was a correlated rise in the amount of coins in top exchange wallets for Kyber. So here at this December 6th top, then here at the December 17th top, here again right before the January 7th top, here again. And so currently we're not seeing this same trend. We're seeing a bit of it right here, and maybe as the data for today updates, we'll see a bigger spike. But at the moment, we're still not seeing a huge inflow of Kyber coins to exchanges overall. So I would wait until I see at least this chart update itself with a big spike in exchange inflow of Kyber, just because that can often also indicate a rising speculative as well as sell activity for the coin, especially during an uptrend. So keep an eye on this before you make any sort of rash decisions about the coin. Finally, probably the most interesting thing that I've found, I've dubbed it KNC weirdness. So one of the things that we have in our charts is the dashboard that shows you the top transfers for any specific coin. So if we type in Kyber and we look at the last 7 days, you can see the top transactions for Kyber over the last 7 days. This one in particular is the one that I'm interested in because it's quite wild. So it happened 2 days ago, and it included a transfer of 700,000 Kyber from this address to this one. And then you can, in our platform, you can just click here and it will link you to the Etherscan information for this transaction. So you can see that about $200,000 worth of Kyber have been transferred from this address to this one. So if we look at this address, we will find something quite interesting in their behavior. So the recipient address has received this 700,000 here, right, at this point in time. So from then on, it has moved Kyber that it has received in 2 batches. It has moved 200,000 to this address and then 210,000 to the same address in 2 batches, basically. So if we keep looking at where these coins end up, we'll find some interesting patterns. So here, the address that these about 400,000 of these 700,000 Kyber end up on now starts to sort of batch these coins into smaller transactions. So it received 210,000 here, and then it cuts it into small pieces and sends it to several different addresses. And it does so with the same transaction of 200,000 coins, pretty much the same behavior. So the interesting thing that I found is that basically the Kyber coins go to three major addresses. It goes to this address, it goes to this address, and it goes to this address. And 2 out of 3 of those addresses end up sending their coins to Binance. And this is one of the things that I'm kind of worried about when it comes to Kyber's, short-term action, because the biggest transaction over the last 7 days has seen most of its coins end up on Binance. So here and then here as well. However, this first address is even more interesting because instead of sending it to Binance, it sends it back to, or it sends it forward to this address. I don't know if you guys are following this. Let me know if you're not. And then let's just complete the circle because it's quite funny. And then it sends it to this address, which finally sends it back to the address that the Kyber originated from. So to me, at least, this seems like a person that is sending about 70% of this amount of Kyber to Binance, but in smaller transactions, so maybe it doesn't get registered by like whale alerts and general signals that are tracking these big movements. And then it's sending about 30% of this Kyber back to this original address, which might indicate, just trying to fake a bit of transaction volume in order to pump the price of Kyber even more. It might not, there might be a different reason for it, but this is sort of something that I've been seeing with the Kyber's top transaction over the last couple of days. And this is something that you can do only with our data. Basically, here you can look at every single top transaction for a coin over time and kind of how it has impacted the price of the coin. And then if you find an address that you're very much interested in, for example, this one, what you can do is you can select it here. Oh, actually, it's this one, right? So you can copy the address. Let's say, I've seen this guy be, he seems to be having his pulse on the market, and when he starts selling coins, the price of Kyber seems to follow along. So what I can do is I can go to Sandbase, right? And I can look into labs, historical balance. I can paste this address. One sec. Oh, right. And I then choose Kyber. So I can look at like what it has done with the Kyber over the last 6 months, for example, and then basically just this historical overview tells us quite a lot about how this address's performance impacts the market. So we see that it has moved a lot of Kyber coins right around the December top. It has done the same thing right around the January top, and it started doing the same thing now. So this is, if history is to be judged, then this guy seems to have quite an impact on the market. So one of the things that you can do is you can click here on generate signal, and you can create an alert which lets you know the next time that this wallet moves any sort of Kyber from his bag. So basically, you can just say, okay, anytime that it moves any sort of Kyber, let me know, and then in that time, you'll get a signal on Telegram or email, however you decide, and telling you that, oh, this guy is moving his Kyber supply once again. You might want to keep an eye. And just click create signal, and there you have it. So this is something that I wanted to show you, just basically how with our data you can go super granular, both look at the overall Kyber activity on the network, like we did just a minute ago. Just look at their like development activity and network activity, social volume. So all of those like meta metrics. Just to show you again. So all of these meta metrics, as well as diving specifically and individually into each of these transactions and following the clues into what might happen next for the coin. So that's going to be it for today's session of This Week in Crypto. I want to thank everyone that has been contributing to this call today. If you like what you've heard today, I strongly suggest you check out santiment.net. as well as app.sentiment.net, which is our free platform where you can check out a bunch of different indicators, fundamental metrics, on-chain social data, and development signals for over 900 different coins. And also, if you want to join these calls in the future, be a part of them and share some of your own findings and have the Sentiment team kind of, give their own opinions on it, please let us know on our Discord. The link will be in the description of this video, and we'll save you a slot for next meeting. Until then, thank you all for joining us, and I'll see you next time.
Super interesting demo on Kyber, by the way, Dino. Awesome.
Oh yeah, sorry, I didn't. Yeah, I wanted to just run over it because we didn't have much time. Sorry that I didn't leave room for your comments, guys. But yeah, are you seeing the same thing that I'm seeing? It's super, super weird and fascinating at the same time.
Yeah, it's something to really start to look into more as we go forward. I think it has some pretty cool merit. So I want to look into it more myself, and I've never learned about that kind of stuff before.
Top ERC20 transfers is probably one of my favorite metrics of ours. So anytime that I really want to know what's been going on recently with the whales and how they impact the price of the coin and what they are doing at the moment, which might impact the price of the coin, I go here and I just take a deep dive. It might take a while, but you'll learn something that nobody else knows on the market. So there you have it. Okay. Well, thanks, guys, and talk to you soon.
Take care, everyone. Thank you.